Welcome to our weekly market review, again brought by Treasury One and ETM Analytics. It's my first one for the new year. Andrea, I know you guys kicked off last week already. But man, if the past couple of days, let alone weeks, is anything to go by, then, well, we better strap on our boots for the ride that is going to be this year. There's obviously a lot of cross currents happening, geopolitical, power politics at play, people with egos in the mix. It feels a bit like a maze. So maybe it's safe to say that we need to stick to the data. And I think the most noteworthy one thus far was the US non-farm payrolls, which came out last week, slightly below expectations, but that's not the newsworthy part. The interesting part and the crux of this data set is the fact that there remains these enormous amount of revisions happening to this data, and that should be concerning.
Yes, we did our first one. Good morning to everybody. We did our first one last week because we felt that with America capturing the president of Venezuela, that it's worthwhile doing a video. But it's like I said just before we started, actually one needs to read a lot of things, but what's really happening is Mr. Trump is in charge, and he's indicated clearly that he does not pay any attention to what happens internationally, and that he's
that Trump pony.
Yeah, it's fortunately not, but he's more focused on what is in the interest of America, whether it's Greenland, whether it's threatening Colombia, whether it's Mexico, now it's Iran. He'll do whatever he thinks is good for America. Maybe he should focus more on his department that releases statistical information for us and get them going so that, as you say, they don't revise figures all the time. Because the latest figure that came out was showing that your payrolls are contracting, and the revisions through the year amounts to 624,000 jobs. That's a heck of a lot. So that shows that there's a big revision all the time. But it clearly shows that the US labor market is a lot weaker than initially anticipated. Now, that, and I've said that many a time before, is one of the key things of the Federal Reserve. The Federal Reserve's got two things that they focus on: labor and the labor statistics, job creation, unemployment, etc., and then also inflation. Now, the inflation to be released this week might be a little bit an interesting one, but what's very important to mention here as well is a criminal investigation that is now being opened against Mr. Jerome Powell. Once again, an attack on the independence of the American central bank called the Federal Reserve. Not good. We know that he's about to be replaced, but now this just adds to the tension between Federal Reserve President and Mr. Trump and other departments leading these investigations, and obviously that impact that it could have on monetary policy.
Yeah, it's an interesting development that broke overnight with Jerome Powell making that very serious video of him announcing that the Department of Justice has served me with a subpoena and it's a criminal investigation. Funny enough, Trump, as he left Mar-a-Lago, he said as he was boarding Air Force One that he's not aware of the case. So, but it doesn't matter. It's the optics, like you said, around it. The optics matter in the independence of the Federal Reserve Bank going forward. So that's just another cog in what is becoming increasingly a very difficult domestic situation for Trump to navigate, let alone what he's doing in other countries as he tries to, I suppose, in his words, advance American interests. So domestically, the man has got several headaches at the moment that needs to be resolved, I think, and that's going to be another very interesting trend play out in 2026. And of course, we'll keep track of that and how it affects markets. But you mentioned the US inflation data. That latest data set will be out this week as well. A slight uptick is expected, nothing serious though, but I think this is just going to bolster the Jerome let's wait and see Powell argument that he's been saying for the last 2 years now. We'll wait and see on the data. So I think it will it's going to play into that, with it they will start holding off again on interest rate hikes, at least at the beginning, right?
Absolutely. That will underline his rhetoric speech of wait and see, look at data. Now, but if you look at the slight uptick that we are expecting, it does actually show that inflation is fairly contained and that there's not a runaway situation, and that we could most probably, with labor data looking a little bit worse and so forth, in the next sets of data to be expected over the next couple of months, be a slight cooling effect on inflation, pointing to a downward direction, moving closer to the 2%. So the labor data could mean that there is the possibility of further interest rate cuts, and that would be underlined, but might not be at the first meeting.
That's right.
So it would be interesting to see. Otherwise, the impact of all these things in America, you've mentioned a lot of domestic issues that needs to be addressed, but it's the geopolitical situation going forward, and I'm stepping away from inflation, and that would move more to general situations, is the fact that if you look at gold, for instance, this morning, touching the 4,600, trading very close to that. Other commodity prices also on the increase. That really clearly says one thing to me, and that's there's a continued mistrust in what happens in America and what can be expected, especially related to the debt, rising debt levels and all these things, and the domestic situations, and people and investors, including central banks, moving into other areas of investment like gold, because of that uncertainty of where the dollar could go and what the value of the dollar could do over the next year, because it's possibly in for further declines rather than an uptick in the dollar prices.
Something that we did discuss this morning is that it's something different has definitely happened in America, because over the past year and a half to 2 years, we have seen these red flags flash that the US economy is supposed to go into recession. There's various ways of looking at that, and we've been calling for it, and yet it's holding. And a lot of that obviously has to do with the AI investment that's been pumped into the US economy. I think it contributed by some estimates like 1% to 1.45% of GDP to the US economy. So it is significant. And I think a lot of the uncertainty is around how long that will last, how will it play out, depending on where AI is going. And of course, like you mentioned, the geopolitical uncertainty also baked into it. So we will have to continue tracking it very carefully, because things don't seem to be operating the way we used to it. And it makes it for a very interesting case to study. But speaking of geopolitical uncertainties, South Africa and the currency always finds itself in the crosshair. It's the tip of the dog's tail, so it always makes massive swings. Or has a lot of the uncertainty already been priced into the South African currency?
I think a fair amount of uncertainty has been priced in. But I've just said that if you look at the changes geopolitically, domestically in America, I've mentioned that we could see a continued weakening of the US dollar against major currencies, especially if you look towards gold, like I mentioned, and so forth. And I think from that possibility of further weakening of the dollar, the rand could possibly further gain from that underlying strength in commodities supporting our trade terms and all these surrounding things. And also in South Africa, locally, things are not looking that bad. GNU still holding, everything's still looking fairly positive. We're heading up into the budget. We've still got fiscal discipline, etc. So the rand could be poised towards slightly further gains, maybe at a slower pace than last year, but definitely possibly further gains going forward.
Speaking just quickly between the relationship of the US and South Africa, the US House of Representatives will this week also vote on a bill on the extension of AGOA and whether there will be amendments that it can exclude South Africa. Is still a very real possibility, but hopefully we will have more clarity on that policy direction after this week. It's going to be an interesting year for South Africa as we head towards the local elections later this year. So we expect a lot of very contentious political rhetoric to come out, especially so keep an eye on the headlines, no knee-jerk reactions, but it's going to heat up definitely. Andre, I think we're in for a very interesting 2026, and I look forward to discussing it all with you starting again next week.
Thank you very much.